There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB as we wrap up the day and the week here at AusBiz. I'm Andrew Gagan. Good to have you with us. So what a week it has been. Our heads are spinning here at AusBiz and we've seen some massive market moves in response to some of the reports and results that we've had across the course of the week. So today, as it turns out, we're looking like we're going to be down almost 0.5% on the CBO 200 and checking in on the ASX at the moment. It's off pretty close to 0.5%. This is off the back of mixed results, but also profit taking, bearing in mind the ASX 200 hitting that record of, well, eclipsing 9,000 for the first time yesterday. So let's take a look at the themes of the day. In fact, as we wrap up this Friday, Jackson pothole. Well, look, potentially, traders just a little cautious in regards to the symposium at Jackson Hole in Wyoming, where the key speaker, of course, will be Jerome Powell, wary of what he is likely to say in terms of some guidance on interest rates, with many traders expecting there's going to be some significant volatility of what he has to say. So it is a potential pothole for markets. Reporting rollercoaster certainly has been today. Some exaggerated moves both up and down depending on which stocks have reported. I'll get to that in just a moment. And well, one more week. Whew, goodness, 3 weeks in, 1 week to go of a full week of reporting at least as we wrap up these full year results. Well, let's get to some of those sectors that have moved significantly today off the back of those results. Certainly the focus being on the consumer sector with the staples. Coles down 3%. That's actually ahead of its results next week. Woolies also coming off a little there as well. Treasury Wine having already reported elsewhere. In the discretionary sector, that has also seen some outsized moves, in particular Guzman y Gomez. It's a miss just as far as certainly its outlook is concerned. That has unnerved investors and as a result having tumbled more than 17%. Elsewhere they're just a little mixed. Wesfarmers is reporting next week, so it's up marginally. Harvey Norman also a gainer today, whereas JP Hi-Fi has come off. In the tech space, WiseTech, another one yet to report, it's down 1.5%. Xero, it has delivered its numbers, off marginally. And Zip, notably there, certainly the winner of the day, you would think, up 18% off the back of its results and certainly its outlook that it's seeing, particularly stateside where it's focused, and on the financial side. The major banks fairly mixed at this point, with Westpac being the winner today. We have seen actually a significant rotation out of Commonwealth Bank into Westpac as a particular trade. Let's get to some of those results then. And Zip, as I mentioned there, eyeing a secondary listing on the NASDAQ as well after posting a 46% increase in US revenue for the year. Fast food chain Guzman y Gomez reporting a profit of $14.5 million in the full year, more than doubling bottom line results, but it's all about what's ahead of the company, and it has tumbled. And Inghams, which no doubt supplies some of its product to Guzman y Gomez in the form of chicken, posting a 10% drop in full year profit to just under $90 million. It's down almost 20%. Regis Resources in the gold space, reporting a profit of $250 million for the full year, improvement of a $440 million loss in the prior year. Nonetheless, once again, it's all about that outlook. Other notable movers there, Accent taking a tumble. It's also a miss. Qualitas, largely positive result there. Just shares coming off a tad. Costco, another huge mover, up almost 24%. And of course, it's only been listed for about 9 months or so. So it's first full year result. And also Helia Group, positive there. Well, let's now turn to our stock of the day, and that happened to be Guzman y Gomez. And our expert, we were flying solo, in fact, for the show on the call today. Adam Dawes from Shaw & Partners with his take on the fast food retailer.
The stock's expensive on all metrics. I don't understand why they'd like to go into the US. How many Mexican burrito stores are in the US? It's a flooded market, from Taco Bell to Chipotle to, you name it.
So you think they're set up for failure there, do you?
Well, yes, unless they've got some kind of differentiation and they say that they're fresh food, they've got better ingredients, maybe it's bigger or small. I just don't see that expansion really working.
Well, let's now wrap up the week that was. Joining us, Shane Oliver from AMP. Shane, welcome back on the Friday. Great to catch up with you again. So I guess we take a look at global shares, and it has been fairly mixed this week, hasn't it? Certainly, traders just a little nervous ahead of that Jackson Hole symposium with Jerome Powell speaking tonight. We'll get to that in just a moment. Can we first start with what you've seen locally, particularly out of reporting season? There have been some massive moves, a lot of volatility there, and depending on those winners have really won, whereas the losers have been punished severely.
That's right, and I think that's a testament to how sensitive the market is to what happens on earnings at present. Because don't forget, this is likely the third financial year in a row where Australian company profits have fallen, and yet the market is trading on a forward PE of 21 times. So that leaves it somewhat vulnerable. I mean, the normal PE is around 15 times or something. So that leaves the market somewhat vulnerable. And of course, you can trace that down to the level of an individual stock. If there's a disappointment, whether in terms of the actual earnings or guidance, then the stock gets punished heavily. But if there's a beat, either a guidance or the actual result, then the stock can go sky high. And we've seen quite a lot of that over the last week. But when you look beneath the surface and sort of average it out, you actually see a situation which isn't too bad. Yes, we probably are going to see earnings down for the financial year, but that was largely factored in. But we are seeing more stocks report gains in profits on a year ago. I think it's about 2/3 are seeing profits up on a year ago. Similar story in terms of dividends. So while there's been some high profile misses there, overall, you're sort of getting the impression that the average stock is starting to see things a little bit more healthier. And that, I think, is consistent with the economic data we're seeing, which is showing signs of a pickup. Most recently, the PMI, business conditions indicator that came out for August, is up, continuing a recovery we've been seeing. I think it's actually at quite solid levels, around 54, 55 from memory. So that's good sign. And at the same time, we've got the Reserve Bank cutting interest rates. So even though, on average, profits are going to be down, market has factored that in. We also know that the bulk of the reason for that is because of the resources stocks. If you strip out the resources, then there are signs of growth starting to emerge. So overall, I think reporting season is okay. I am conscious that we're only, 2/3 of the way through, or a bit more than that. And in the final week, you often get some disappointments. The laggards are often the ones that disappoint. So we could see everything dragged down again next week. But so far, so good. And I think that is the reason why we were able to go to a record high yesterday. I think it was. We come off a bit today, but we're still going to have a good week in comparison to the US.
Yep, well, certainly that psychological barrier crossed of 9,000 points on the ASX, so that was significant. Shane, the question, of course, whether that can continue, and we'll get some further results, as you mentioned, next week. Let's turn then to what we're seeing stateside. Interesting, just a little weakness emerging among tech stocks. What are you seeing there? Perhaps further questions being asked about that AI thematic.
That's right. And this seems to come up periodically because when you've got something that is new and it comes along, it generates a lot of enthusiasm. the market runs ahead of itself, and then, of course, something causes nervousness. In the last week, it was the report from MIT, which showed that a lot of companies aren't getting a full benefit from AI. I mean, the problem I had with that report is that the interpretation of it seemed a bit overdone. It's very early days in the AI story. There was a lot of success stories in that report. And of course, all companies are still working out the best way to make use of AI. And we're seeing the exact same thing in Australia, where there's been, people laid off and then brought back again. There's a high-profile example of that in the last week. So that's going to be an ongoing feature. But I think anyone who's used AI can see that it does offer huge potential here, and therefore I sort of treat that MIT report with a grain of salt. It's just working out how to precisely best use it. But we're also coming up to the NVIDIA results, I think, on the 27th. And obviously that's a big factor here for the US share market. The US has had a fantastic reporting season. Profits up 11%. The expectation at the start of the reporting season was 4%. We've had 81% of companies outperform. The norm is about 76%. So it's been great. But of course, we've got that one big stock to come at the end of the reporting season, and obviously nervousness ahead of that, and that has weighed on the tech sector. We also know that in the US, if you look at the average stock, or we sometimes look at the equal weighted index in the US, it's sort of been going sideways over the last couple of months, whereas it was the tech space that took us to all-time highs. So yes, there is a vulnerability to tech there. But I guess the other factor is that you've got Jackson Hole coming up, so that's creating a bit of nervousness as well, as we'd probably all be aware on that in terms of what Jerome Powell's going to say. I think, again, that one's probably a little bit overdone compared to the old days when Jackson Hole was used by the Fed to reveal momentous changes. It's less momentous these days, but everyone still will focus on it heavily. So I can sort of understand, given how successful the US share market has been, that we go through this bit of an air pocket. It's quite normal. I wouldn't necessarily read anything too negative into it. That said, this is August. Next month is September, and those 2 months of the year are often the weakest months of the year. So it still wouldn't surprise me at all if we had a sort of a correction before gains then resume again. But trying to time these things is always going to be hard.
Yeah, indeed. Shane, I was referring to Jackson Hole as the potential pothole. I mean, is that likely perhaps that markets could have a violent reaction if we do hear something from Jerome Powell that's likely to irk markets, or do you think he's going to play a straight bat?
I think anyone in Sydney at present, where it seems to be raining all the time lately, would be aware of the danger of potholes. That's obviously a big issue for Sydney-siders at present, potholes. In terms of Jackson Hole, that's a direct way to look at it. It's portrayed as a difficult one for Powell because he's got Trump on the one hand, pressuring him. Trump is Trumpifying the Fed. There's already 2 votes for a rate cut there. There'll probably be another one by the time Mirren gets on the Fed. And then you've seen this mixed data lately, which really puts the Fed in a bind. Inflation indicators still would suggest, well, wait a little bit. Then you've had softer jobs data. I mean, if you look at that business PMI survey that came out overnight for the US, you've got output prices and input prices in the US. They're the main thing dragging prices up globally. Outside of the US, it's all fairly soft, including in Australia. But you've got that issue in the US. The Fed would look at that along with lots of other data and say, we still want to be a little bit cautious here. And then you've got the jobs figures, payrolls a few weeks back. We get an update in a couple of weeks' time. They've been on the soft side. And jobless claims. Initial claims seem fairly low, but continuing claims hit their highest level, I think, since 2021, and they're trending high. In other words, when people lose their job in the US, it's getting harder and harder to get a new job. And that is a warning sign that the Fed has to be aware of, and therefore trying to balance this and not make another mistake on inflation, I think, is a difficult act for the Fed. So I think Powell is going to play it fairly safe. He's going to say, these are all the issues, the things that I've just gone through there, and we will make an assessment by the time we get to that meeting in September, which I think is still a fair way off. So we've got, 3 4 weeks, 3 weeks, I think it is. My leaning is they probably will cut, but it's not fait accompli. And the Fed is also conscious that the reason the labour market might be slowing is because of weaker supply, but there's also a demand element in there as well. So it's a difficult one for the Fed, particularly all the politics around it. I mean, I find that politics kind of annoying. There's that comment by the Treasury Secretary that any model you look at suggests the Fed funds rate should be, way below 175, 150 basis points below where it is now, or something like that. And all the models I look at don't suggest that. They suggest it should be around current levels, maybe a little bit higher. So that's probably unhelpful in the great scheme of things. It does confuse people in terms of what the Fed's on about. But I can understand why the Fed wants to be cautious here. They got into trouble for letting inflation get out of control, or contributing to letting it get out of control a few years ago, and they don't want to repeat that mistake.
Well, hopefully we get a little more colour when all is revealed by Jerome Powell overnight. Shane, enjoy your weekend. Thanks so much for joining us from AMP.
Thanks, Andrew. Take care.
All right, let's catch up again with what we're seeing on the local market after the close on this Friday. Another big week, of course. Let's get to those winners and losers. Zip, very much a winner today, zipping higher, dare I say. Coden, James Hardie also making a bit of a comeback, bearing in mind just how far that stock has fallen off the back of its disappointing results. Elsewhere, just as far as the negatives today, let's flip the page. Inghams and Guzman y Gomez certainly leading the list there, both disappointing on their outlooks there. Regis Resources, the Goldie, also coming off along with Genesis in the gold space, and some of those lithium stocks, including PLS, also falling today. In terms of the smaller caps, well, High Pages, it has leapt higher off the back of a significant upgrade in terms of its outlook, and Novonix also on the winners list there. Negatively, Monash IVF also out with the report today. Its results reflecting some of the issues it's had to deal with more recently, but also some concerns about what's ahead for the business as well. So what's on overnight? Well, of course, it is the Jackson Hole Symposium, where Jerome Powell will be speaking. It's going to be fascinating to see whether he actually does give the market anything to trade on. And the week ahead, fairly quiet locally, but once again, of course, the focus will be on earnings as we get into the fourth and final full week of earnings results. Among those companies reporting there, Fortescue, Coles, PLS, Woolies, Mineral Resources, Wesfarmers and Qualitas. We do get a monthly read on inflation on Wednesday, and also out of the US, US GDP and further jobs data as well. So let's recap where we've finished the week, and certainly this Friday at a low. Currently the CBO looks as though it's settled down 0.45%, the ASX off close to 0.5% to be back below that 9,000 point level, having reached a new record yesterday. That is the COB. Enjoy your weekend. Thanks for listening and watching.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.